Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So definitely an interesting moment in time, just on many different facets, which I can't really get into. I'm not allowed to talk politics here. But we do have President Trump address to Congress tonight. It's at 9 o'clock, and we'll see how that goes. As far as the market's concerned, we've had a huge rally with lots of action, lots of things to do, lots of different ways to trade it and play it and be involved. And for now, I'm actually treating tonight as if it's like an earnings event. If you're part of Redler All Access or in the community, usually into an earnings event, I bring my risk down because you never know what's going to happen. So sometimes I'll take options because risk is premium paid. Sometimes I'll just avoid and see the reaction to it and then, re-engage. So, pretty much since post-election, we've been very engaged with the market. And, last Thursday we came out and said that we went back from portfolio approach to tactical. What does that mean? It means holding 6, 7, 8 positions for a nice rally above the 8 and 21 day to, being in less positions, looking for some longs and shorts because there are many divergences, and just being a little bit more risk off and opportunistic based on each morning and how things develop. So if you go to the chart right here of the S&P cash, really not much to dislike. As far as the pre-election sell-off and then the snapback, and then here's when we check out the descending trend line all the way up to this nice move once we showed commitment to the breaking of this ascending trend line here. We've been above the 8 and 21 day this entire time. So right here, with us going sideways, sometimes you get a nice time consolidation. At this point, we're still above the 8 day, but we've come a long way since breaking above 2,300. We've come a long way since breaking above this pivot, and we've come a long way since here, and we've come a long way well before then. It's been stair-stepping up this entire time. So the question is, can it continue? So we'll see if we do. At this point, again, we have the sideways consolidation. We have big support at 23.52 that we held last Friday. And you have today's low, which was above that. So the range is still intact. The question is, if you're really active and we break below it, do you want to sit in this for what could be a move down to the 21 day and still be healthy? Or even to the accelerated trend line and still be healthy. So if you're an active trader, you might not want to sit through that in 6, 7, 8 positions. If you're looking for a short entry and you're going to short thinking something's going to happen, then you just have to be prepared. You might get squeezed like a lot of others have gone along the way. So I would do whatever you're doing, do it real light. Today, the IWM, probably a little bit more bearish than bullish. Why is it more bearish than bullish? Because you're closing the dead highs, looking like you're going to break out, open lower, close on dead lows. Doesn't mean it's broken, doesn't mean it's going in the 50-day, doesn't mean it's breaking this range, no. But is today more of a bearish day than yesterday? Yes. And, it showed some power because not only could it not go green, it, closed below a prior low. So this is giving the bears a tiny bit of a clue to say, hey, you know what? Maybe the small caps are telling us the market can go a little bit lower. Then you go to just say the XLE, which I was in, I didn't take home. It's still hanging in there. Oil was lower, it hung in there, and then oil rallied back and didn't do much. It's a laggard sector, so if we were to discount, into tomorrow, this was probably one of the first things to break below it. If we happen to rally again and this wants to play catch up, maybe we'll have some room to rebuy it back, but I did not take it overnight. And then, today you go into some high beta tech names. There are definitely just different types of trades now. For a while before, you could trade the stocks, riding the momentum, 52-week high trades, and it feels like, those are far and few between. You have some holes in some of these charts based on earnings. You have some loss of momentum here and there, and then you just have a lot of things doing a whole lot of nothing. So, real quickly, Netflix, no position, just someone asked me to go over it. Right here was when we pretty much got out of our portfolio approach in this one after it cleared this and after it's been riding the trend, which it's still doing. It's still riding this trend, but to me, I don't see a reason to be long it for momentum. Okay, some guys are long versus 140. If that's you, fine. Today, closed near lows. Maybe it breaks this, maybe it doesn't, but I don't see a reason to be in this. Some of guys are actually even pointing out this to be like some kind of, head and shoulders top, but I don't really see it. But if you want me to show it to you, here's your neckline. If it were to break below, but it has not done that. So that's Netflix. So I don't see a reason to be sitting in Netflix unless you have a thesis for it. Then you go to, Amazon, which opened up strong on the heels of Target getting crushed. But what did it do? Okay, if you play for momentum, what's the momentum rule? If it opens up above a prior high and you're in it to make new highs, and then it comes back below it, you get out of the way. That was at 852.50. It was as high as 854. So that was one exit. Then it went red. That's your other exit. If you're in it, since it cleared the post-earnings gap, okay, that's different. If you're in it because you've been in it for 4 years, that's different. But for now, it's looking a little bit more vulnerable, not something you need to just sit in. Google also. Google has been acting kind of better. There's just actually some news near the close that rallied it up a little bit. It still held the 21-day. But I guess you could be long versus today's low if that's what you wanted to do. But if you were playing for it to get above this to get back to highs, not ready yet. If you're in tier 1, saying I'm going to buy into the 21-day and then maybe tier 2 when it goes, that's a way to do it also. We shall see. BABA, still very, very choppy. Some guys are long versus gap here. If that's you, you're not over trading it anyway. If you're trying to play a breakout here, it hasn't been so easy. This was one trade that you could have made money, but you had to get out fast. This 2 days was not as powerful as these, so maybe that means something, maybe it doesn't, but just in this range doing a whole lot of nothing. Then you have a lot of tactics. Last Thursday when we went into tactical approach and we didn't have to deal with the 12-handle down open, there were things to do into that because we weren't caught. One of them was NIVID. NIVID did a nice reversal into that 94, 96 area, okay, which is right here. So you could have been a buyer on support or when it went green. Yesterday you had a little follow through, and then today, what did it do? Got rejected at resistance. Why did you have to worry about where resistance was? Because it's kind of broken. This had failed at highs. Here was your lower high. So this was just a snapback rally into the moving averages. So if you bought it here, maybe you sold it yesterday. If you were looking for a short, it went above 105.02, went to 105.20, and then gave you a red dog reversal. Now we'll see maybe tomorrow if we were to open down, I would look at it and maybe get a higher low. And then with more time, maybe it gets above this to be better. But all in all, it's good to know, when you buy things where they might go and where it might be hard to get through. And if you're looking to, if you covered your short here, because a lot of people were short. Remember this gap down, closing lows, it was down $3, $4. You could have made money. You said, hey, you know what, from 120 down to 96, I'm going to cover. And then from 96 to 105, you could have said, hey, I'm looking to reshort it. Same way if you sold it on this little crap move, you could say, hey, I was looking for an easy bounce into the moving averages, and then I'm going to wait and see. So those are the thought process you have to have when you're actively trading things for cash flow. If you've been in NVIDIA since last year, since 40 or 60 or 80, maybe you don't care as much. Maybe you're doing some kind of hedging option strategy with it. If you're trading it tactically, it's been a little bit broken, so you're tactically maneuvering it versus sitting in it, for a trend. Then what else were people looking at today? People were looking at AMD. AMD, I wouldn't recommend buying it back on the first down day. Okay, that's right here, but it still hasn't broken. I don't like breakout potential failures. We shall see. It's not quite that yet. Some of you guys had X overnight based on what Donald Trump said. Okay, at this point, you've had lots of nice trades in X, boom, all the way up. This was pretty engulfing here. What did it do? Held the moving averages where it broke out from now into a big upgrade. You had a topping tail, lower high, so tells you should probably be, out of it. If you're shorted going into Trump, you might be in trouble because who knows what he says about infrastructure. If you're trading it technically, you might have gotten stopped out when this got engulfed. And if you did, this is worth a try into support. And now into the old, this was support, now it could be resistance, which it was. You tactically keep maneuvering. And that's how you tactically maneuver both long and short when you have risk down. So Freddie, basically if you were looking to be in the banks, let's see what the banks did today. FAS, still hanging in there. I guess the banks kind of look like the spiders holding up. The banks held in better than the small caps today, so as long as it's still above here, it could go again. Last nice move we had was here. I personally think that 55% chance of a March rate increase is low. I think it should be more like 75%. We'll just see whether or not there's still juice for the banks to go up if they raise, which I think they do raise. But anyway, we'll see what happens there. Right now, the TLTs don't really think or agree, unless they're just trying to mess with people. The TLTs actually, if this was a stock, I would say, looks as if, put a low in, a higher low, and if I was short, I'd be a little careful because if it got above this spot here, it could see the 200-day. So right now the TLTs, it's above all the short-term moving averages, still below the 200-day, so still kind of broken, but this is saying this might move up, and it's telling you right now that they don't believe that March is a go, but we shall see. GLDs, tiny bit of follow through to yesterday's red dog reversal, not a lot. What was yesterday's reversal here? That was right there, boom, 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 red dog reversal, but what did it do? It held upper support, so just a little choppy, still in this accelerated range. Shows, I guess, if you're still in it long and you've been in it since it reclaimed the 8 and 21 day here, just be a little careful because, coming into an inflection point. Whenever some things get to an inflection point, you just want to take a little care and know where they are. Apple had their shareholder meeting. Tim Cook said that they're working on some, futuristic new products. I think it has obviously something to do with, the virtual reality headset / business / AI, but we'll wait to see. Apple as of now is still hanging out. I think this is good. By an upper base like this, maybe it gives you time to refresh a little bit. So next time it wants to go and maybe get above this, this pivot area of 137.50, we could sink our teeth into it. I haven't been that active in Apple. I think, we obviously didn't get it in for earnings. I think I bought it on this day, added on this day, and sold it right around here. So that was a good trade, but missed this part of it. For those of you just sitting in it, because my target's 142 to 144 for my Redler All Access note, and you bought it down here, then you do things differently. You probably have all 11 or 12 of the names that we've been trading. Oh, talking about names that we've been trading, Tesla was where I made my money today. If you're on the VTF, it was probably just say, I think I went over it in the Morning Call Express too, talked about how Tesla held the 50-day yesterday, and you could probably buy it while it's down, versus that pivot from yesterday, add to it to fill that gap, and then that's a great trade. Then you move on. Okay, so I think I sat down at 9 o'clock, was talking to everyone on the VTF. All of a sudden, it popped up, green on Tesla, and people on the VTF like, what are you thinking? Why are you in Tesla? Blah, blah, blah. I'm like, you know what? Held the 50-day. We have $2 in risk. For some reason, I feel like a lot of people thought the secondary would happen, so they might have been pressing a short. It didn't happen, so if it doesn't go down, it probably goes up. Good for cash flow. So what did Tesla do this morning? Or today, it had a nice move yesterday. It held the 50-day, held above it, did clear yesterday's high to get in that gap, which was 248.36, and did get as high as what I thought would close it, which was 251 into here. So now, if they don't announce another secondary, maybe with today's strong close, it gaps up a little bit, and then you'll have to see how it deals with the moving averages pinching down. But for today, was a nice focus. It's been a nice focus this entire year, but for now, here's when it's above the 8 and 21 day, giving you lots of nice trades along the way, or if you held it, here's, right into earnings when you do not hold stock into earnings, especially a stock that went 90 points. But anyway, here is like potential day one, and we'll see if it could bounce back, and then it's going to need a lot of time to rebuild. And then at some point, maybe now it's it'll get back above the 8 and 21 day, and then become a better momentum trend again. But for right now, it needs time. But for today, it was a good day trade. And that's what we do. Besides trying to have swing trades and play trends and talk about being responsible with the market and fitness on the weekends, we try and find tactical ways to make cash flows every day that could turn into cash flows for the week, for the month, and then each month turns into a year, and that's a career as a prop trader. We specialize in training prop traders on how to participate with the market, and that's how I make a majority of my money, is by being a prop trader, not just a chief strategic officer who tries to give you guys my game plan that I use every day to try and responsibly make money. On top of that, I talk about how the bull market wins because it's won for 100 years, and if you're worried about your 401k because Trump's speaking tonight and you're 20, 30, 40, or 50, don't worry about it. Just keep putting your money in every single month, and if you do so, over time, you'll see that you probably win, and that corrections do help your cost average if you stay through the process, but that's totally different. I will be watching it tonight. I might open up a bottle of wine and tweet a little bit here and there about, what goes on, because I did that during the Republican, nomination process and the election process, and it's fun to do sometimes. I love to sit around on the couch, drink a little bit of wine, and talk to 51,000 friends around the world about what's happening in that moment. That's why Twitter's awesome, and that's why I bash Twitter for being such a horrible stock. Jack needs to go. The board needs to shake things up because they have way too much potential for being a dormant little name that does nothing except for every now and then when a takeover offer comes in. Maybe I should go become CEO there. No, I love it here. See you tomorrow morning. Have a good night.